Hey, good morning, everybody. It's Friday, March 20th, 2026. I, of course, am Hammer, founder of Hammer Solutions, founder of great products such as Originator Success, Grab and Go Social, and Rate Sensei. Three great products to help my originator friends get more business in 2026. Be sure to check those out sometime. Remember that I go live each and every weekday morning at 9:30 a.m. Eastern Time, talking about what's going on with mortgage markets, rates, pricing, what's in the headlines that's going to affect our rate sheets today. Broadcasting on Facebook and YouTube. If you would like to make sure you don't miss a moment of the show, make sure you're signed up for our text reminder. I send that out just as I'm going live, so you don't miss a moment. You can sign up for that at hmmr.io/reminder or use this cool QR code over here and get signed up for those. They're absolutely free and there's no nefarious purpose. We don't sell your information or anything. It just makes sure that you can join me each weekday as we chat about what's going on. Today, we're going to talk about a really ugly start to the morning. You're going to see rate sheets that are much, much worse. I'm very sorry for that. We'll talk about why that's happening, what's driving it, what direction things are likely to go, what we may see over the weekend, and what we've got heading into next week. So we'll be covering all of that today. If you're here live, say good morning. If you're watching on the replay, do me a favor, give me hashtag replay in the comments. Either way, don't forget to smash that like button. If you're on YouTube, give the thumbs up, maybe subscribe. Also, comment. I know that you don't feel like it. Maybe you want to just watch, but your comments help me get more engagement with the algorithm, so I appreciate your help with that as well. Let's say a quick welcome to the live folks, and then we'll get started. Good morning, Mike Tebow and Mallory Fotiadas, Eric McDonald, Vicky McSweeney, Tom Dedmore. Great to have all of you here. Brian Reed. Yeah, another crazy open to the day, man. Brian said live and another crazy open to the day. Yeah, it really is. Good morning, Amy Blauser. Is that just you or is my man Zane on? It's spring break, right? So it's probably just Amy. Good morning, Ms. Amy. Mike Brown, Allison Foy, Ringo, 73-100. I don't know who that is on YouTube, but hello and good to see you. Good morning, Ms. Angela. Good morning, Wes from San Diego. Thank you for getting up early to see me this morning. So, all right, my friends, well, let's go ahead and let's get started. We're going to jump in, talk about what we got going on in the markets. Let me go ahead and share my screen. We'll go from there. Here you go. All right. So, taking a look at the technicals this morning, mortgage-backed securities are currently down 48 basis points. If we translate that, that translates to OFK. Yes, you know what I mean by that. That means rate sheets are going to be crazy ugly this morning. We see a huge drop in where things are at. The 10-year Treasury yield, 4.32. Remember that it was only a couple of weeks ago that we broke that 4% level. Here we were, 3.94, back at this lovely day when we didn't know how good we had it. And realistically, things were set up to continue to get better. Now, again, this isn't about politics, and I don't want to spin it into any of that stuff either. So, but yes, it is the war with Iran that has caused the big change up to what we have. Actually, let me move that. There you go. So that makes my head a little bit smaller, but it makes the screen a little bit bigger. So taking a look here, we'll take a look at a quick recap of what happened yesterday. Let me just clear this out and we'll throw this up on the screen. I didn't have this all quite ready the way I normally do. So anyway, taking a quick recap, what happened yesterday. The 5-day, we'll switch to the 5-day view for a moment. So yesterday is everything that between this dotted line and this dotted line right here, right? So yesterday, we had a huge drop to the day in the morning, and we had an awesome recovery by the time pricing came out and basically put us about the same as where we were after the Fed meeting, after all the reprices. So that was really exciting. And then we had a lot of volatility through the day that most people didn't get to see because we started the day when pricing came out right here, and where we ended the day was basically very close, right? But we did have a lot of down, up, down, up, down, little up right here. So there was a lot of volatility yesterday as markets, bonds specifically, were chasing oil prices. Again, everything that you see going on, this is all driven by oil prices. Everybody got mad at Powell and his press conference and blamed him for the wonderful world of negativity here. Again, y'all know I'm a Powell fanboy. boy, BOI. I'm a fanboy. So during the press conference, we absolutely had a negative market response to that. However, you can't blame that for where we're at now, and that's way the hell down here. It is ugly, ugly, ugly. Again, we are currently down close to 50 basis points on the morning. If we translate that over to an actual, like, what does that mean for rate sheets? So we were improving. Remember, to start the week, we started out last Friday, 6.41. On Monday, we saw some improvement. We're going to circle that one in green because things got a little bit better. On Tuesday, right, it's green for St. Paddy's Day, Paddy, St. Paddy's Day, right, as things got better. However, then we had the Fed meeting. Things started to get worse again. Ending the day around 6.36 after reprices brought us back to where we were on Monday. Yesterday got worse again. Most of that was in the morning. Remember, we did see some recovery, but still. And that brought us to where we were, even worse than where we ended last week. Well, today, you would wish for this because this is all gone. This morning, you're going to see rate sheets that are at least 1/8 of a point. Some will be a 1/4 point, especially on a Friday. Some rates are going to be a 1/4 point higher. We may see when he comes out, when Matt Graham, the guy that runs Mortgage News Daily and MBS Live, when he comes out with his little average, I bet you that this is 6.67. That's what I'm thinking. If it doesn't get worse from here, 6.67 is what I think you're going to see happen here. Basically, you're seeing rates go up into the high sixes now. And I have bad news. It could get worse. Now, again, earlier this week, we were in a different scenario, and it really did look like the worst might be behind us as we saw improvement on Monday and Tuesday. We saw that here on mortgage-backed securities when we look at the way that this chart goes. Remember, down is bad, and it makes you cry. All right? It makes you, in fact, we're going to give this, this isn't just a frowny face. This is the double tear emoji that's crying. All right. The double tear emoji, tears coming out of the eyes, crying when it comes down. And we saw that last week, a huge drop in mortgage bond pricing, which pushed rates up. We saw that jump. Let's see, last week started on the 9th. So we were at, look at this. And remember, at the beginning of this whole conflict, I said rates are awfully low. And that's why I was saying about locking them up, that it was going to get worse. Lock them up. I've been saying that in my written lock advice. I've been saying that in my regular advice, right? So here to begin this week, it was like, okay, maybe the worst is behind us. Maybe this is where things are going to settle down. Oil was settling at around $100 a barrel in perspective. We're now at 108. It has gone as high. Yesterday, before markets opened, it was at 119. 119. Okay. Right now, trading at 108.43 or 108.56 or whatever it is, but it's at 108 and likely to get higher. So looking back on mortgage pricing and all that, we looked like we might be improving. And then the Fed came in, and that was just a jab. It wasn't the uppercut. The uppercut came later. So everybody got mad at Powell talking about inflation, but that's still not what's going to drive everything. It did have more of an effect than I expected. I don't want to act like I'm going back on that, but it definitely wasn't what it was here. So anyway, looking at where we are, you'll notice that mortgage bonds, let me put this onto a 6-month, and let's make it smaller so we can see more of it on the screen. Okay. Take a look here. If we look at this for 6 months, you will see that we were at I'll use yellow so you can see it. We were at our lowest level last Friday, and now we just keep going lower. There's no point in talking about technicals. Technicals won't matter here. It's not going to help us. This is all about fundamentals. You're going to see this continue to get worse with market sentiment, bonds selling, in risk of inflation. There's a lot of talk in the headlines as we take a look here that we're going to see more escalation. Trump said yesterday he was not sending troops, but it takes a week. The Marines that are supposedly going over there to take over one of the islands in the Strait of Hormuz, it takes a week to get them there on the ship. They're self-contained on a ship, right? And it takes a week to get them there. So this is not, again, this is not politics, but let's go through. Maybe Trump is just saying that right now until he gets the Marines in place, and then boom, he changes his tune, changes his mind, and the Marines, boots on the ground, things could continue to escalate. That could happen as soon as next week. So keep that in mind. Iran keeps up Gulf strikes as war approaches the 3-week mark. It's amazing the munitions that Iran has and how cheap apparently it is for them to create these drones. They're made out of fiberglass. They can pump them out. They have factories for them that we don't seem to know where they build them. And they are just pumping these things out. And our munitions to counter the drones are much more expensive and are stockpiled. We can't just pump them out as fast. This is why we need manufacturing in America. Remember, we won World War II because we were able to switch into manufacturing mode. Okay. That was why we won. Same thing, I think, with World War I. When you had Ford and Boeing and all these plants, and America was where modern manufacturing was created, assembly lines and consistency. That was Ford. That was all of that was here in America. So anyway, this is all showing that we could see things get worse. Rates could get worse from here. That's what we're looking at here. Yesterday, as the market wrap, bonds, stocks decline as Iran sustains attacks. Turmoil in the Middle East sparked fresh losses across stocks and bond markets, and the UK 10-year yield hit the highest level since 2008. Remember, we are in a global market. This absolutely trickles over and affects our bonds as well, although we're not in that position. Okay. U.S. stocks are heading for a fourth week of declines. In fact, let's take a look. If we look at the 10-year for 6 months, in the last 6 months, we have not been higher than where we're at now. However, back in May of 2025, we were higher. So, but not for long, not for too long. So taking a look here, not good, y'all, not good. So, anyway, that's what we got there. Looking at this, U.S. warplanes and helicopters kickoff battle to reopen the Strait of Hormuz. If the Strait of Hormuz were to be open and safe or safer, that could help. However, they say that it could take weeks for that to actually happen, and it's not going to be something that happens very quickly. The U.S. is sending low-flying attack jets over the Strait of Hormuz sea lanes to blast Iranian naval vessels. Operation is part of a multi-stage Pentagon plan to reduce the danger from Iranian armed boats and mines and cruise missiles, which have halted ship traffic through the waterway. Defense Secretary Pete Hegseth says the strikes have damaged or destroyed more than 120 Iranian naval vessels. But it's going to take more than that. It will still likely take weeks for the U.S. to clear out Iran's web of assets that have harassed traffic through a choke point for 20% of the world's exports and a large amount of commercial shipping traffic. All right, so keep that in mind. Right now, Brent briefly touched 119. I talked about this earlier in the show before closing at 108.65 on Thursday. And that's about where we're at this morning. Notice that oil didn't jump, but bonds took a dump. Oil didn't jump, but bonds took a dump. Look at this. We are getting crushed today. Absolutely crushed. Basically, this is at least an eighth, maybe a quarter point in rate, especially on a Friday, that you're going to see rate sheets worsen. And that's why yesterday, if y'all are not getting our texts, you've got to get our texts. They're $7 a month. You need to have them. This was our text from yesterday. We talked about early in the day that reprice risk was moderate, and bonds started with huge losses, about minus 30 basis points, but have been rebounding strong since 8:30, opening the door to cautiously float. See how the day plays out. Expect more volatility. We could see rates move higher if there's escalation in the Middle East, like boots on the ground or damaging of energy fields and facilities. Watch oil prices. Higher prices will pressure rates. Yesterday, to end the day, despite ending the day the same as when pricing came out, bonds were all over the place today. There's no clear path to better rates at the moment, making it a good call to at least consider locking some loans, especially for the handful of lenders that repriced better. Oil prices fell after hitting 119 overnight, helping bonds improve the same. Expect more volatility tomorrow. Unfortunately, that's where we're at today. We have that same big loss. However, we don't have the recovery. We've got continued selling. This is all bad, my friends, all bad. So anyway, that's it for me. We're going to go ahead and wrap up the screen. I think we've summed that up pretty well. Hopefully that helps y'all today. Randy said, my best Godfather voice. Every time we try to get rates, they drag us back down. And I think it's going to get worse. This is absolutely. Mike Tebow said, I would lock out a higher rate now, take the yield spread to pay costs, easier to refinance in the future. That is good advice. I'm sure everyone else was thinking it too, but keep it in mind. Maybe at this point, try to minimize the cost so you can maximize the opportunity to refinance. The conversation to be having with consumers is that rates will return to lower levels after this blows over later in the year, but it might be a few months. And maybe taking a higher rate today sets you up for a better opportunity to refinance later to recover costs and pay less money. So certainly a good thing to keep on. Wes says, have a great weekend, everyone. And that's what I say as well. Let me know, what are y'all doing this weekend? I am going to stay at an Airbnb with my wife, bnb.com. This one we are staying at. Let me log in real quick. Where's the login? Here you are. And unlock my one password here. Is going to send me some stupid confirmation email-y thingy and all that crap. Let's see. Come on, just log me in. All right, there you go. I do love that Apple feature. Okay, so my trips, bear with me a minute and I'll show you. Let's bring up the screen. This afternoon, I will be taking the rest of the weekend and staying at this cool little treehousey thing over this A-frame treehouse, as they call it here. Look at that. That's a cool little thing, right? That's fun. Nice view. Got a hot tub. Just a little kind of A-frame tree house. Nice spot to enjoy a cigar. Got a little fire stove here and just a nice little setup. A little privacy overlooking a creek. So that's where I'll be today. And I'll be enjoying that. What are y'all doing this weekend? Let me know in the comments. Let me know what you are doing. Wes said he's playing golf. Lots of golf. Very good. Hit him straight and hit him far, my friend. Keep your short game. Allison, charity casino night. That sounds like so much fun. What's the charity for, Allison? What's it going for? Mike is fixing siding that blew off. Dude, you want to see some pictures of my roof? We had 60-mile-an-hour winds here not too long ago, and we get 40 to 50-mile-an-hour winds on the regular, unfortunately. I'll show you my ghetto roof repair that I had to do. Let me go ahead and share the screen here. This was the before. So it had torn off the actual rows of shingles right through. And this is my ghetto repair. I know that these are nailed down and that you normally don't expose nails and fasteners because they will leak. However, this was a temporary patch. You'll notice the shingles aren't even close to matching. They're not architectural. They're actually just 3-tab. But the wind was so strong, this at least keeps the rain off. And I will actually, you can see how sections of my shingles are just tearing apart anyway. Entire sections. This is not the only area that I've had to patch. I had to patch over here. I had to patch on my other roof. So you can see that this roof is shot. It's at the end of its life. So I will be getting a new roof this year, this season. So this is just a temporary reprieve for now, just to go ahead and keep the rain from coming in. So I feel you, man. I feel you. Brandy said, I need to do an Airbnb commercial. I love to my wife picks out, she gets up at 3 in the morning and can't sleep, and she finds these cool places, and we end up at Uritz and tree houses and mini homes, tiny homes, and geodomes. So yeah, we do that. Rob is coaching his son's baseball tourney. Good luck, dude. And that is a great cause. For those that are just seeing that comment, Allison is doing a charity casino night for child sex abuse. So that is a great cause. Mallory is back at a friend's beach house, relaxing and building bonfires on the beach. Don't look at anything mortgage related over the weekend that you can avoid, Mallory, because you're only going to stress out. Don't let that ruin your weekend. So, all right, my friends, I'm going to wrap it up. Thank you again for joining me. Appreciate all of you. I will see you on Monday, and we'll see if we get any kind of recovery. We'll see where things are going to go. But right now, we are primed. It will continue to get worse before it gets better. So I hate to be the bearer of bad news, but keep that in mind, and we'll see where it goes. Take care, everybody. Have a fantastic weekend. Do try to not stress out over it this weekend. Bye-bye.